Hello everyone. So let's start with the new topic, which is income statement. So first of all, if we are talking about the income statement, we are talking about the profit and loss made by the organization. So we are talking about the profit earned, loss incurred by the organization. So income statement is like a report card that what all the organization has done and if the organization has done correctly or not. So if the organization is making a profit, so definitely organization has performed well. That's why the organization is making a profit. But yes, if the organization is making the losses, then we cannot say that organization has not performed well, but due to conditions, the organization is not able to make the profits. So ultimately, when the company is in profit, everybody is going to invest in the company. Everybody is ready to invest in the company. But yes, if the company is basically not in a profit state, nobody is ready to invest in the company. So that is why income statement is going to be very important. So income statement is the statement which shows ultimately how the organization is performing and whether it is better to invest in the company or not. So mainly if the companies are declaring their results in their financial statements, income statement is going to play a very important role because in the income statement, the company shows all each and everything about their operations related to their operations, that how much is their revenue, how much is their sales, how much is their expenses, how much is operating expense, non-operating expense, everything, how much they had paid to the tax department, how much is their net profit, each and everything is going to be the part of the income statement of the company. So that's why income statement is one of the most important financial statement of any company. So if any stakeholder, any shareholder want to invest in the company, then they will check the financial statements. If the company's financial condition is good, then they will be ready to invest in the company. If the financial statement of the company does not show the clear picture, does not show the better financial position, then nobody is ready to invest in the company. So that is why income statement plays a most important role in the companies, like in any terms of goal, like if the company have to collect the money from the public, like they have to collect the debt, they have to collect like equity in any way, income statement plays a very important role. Suppose, just like if somebody asks, if suppose I have to take the bank loan, so what I do when I have to take the bank loan, the ultimately the bank is going to ask me that how much you are earning. If you are earning something, then how much you are earning. Whether you are earning through salary, you are earning through part-time work, you have your own business, how you are earning it. In the same way, when the organization is going for a loan, going to take a loan, the banker, the shareholder will ask from the company that how you had made a profit. You had made the profit out of your regular operations or through like sale of some asset or through some other operations. How you had earned the money. So that is why income statement plays a very important role. In the income statement, company have a operating income. Operating income is this is their day-to-day income. So that is related to the operations. It is going to be the most important income of any company because that is a regular income and regular income will be earned regularly. But if I am talking about a non-operating income, suppose I had sell some asset, some investment I had sold and I had made the profit out of it. But it will not be earned every time. If I have to invest, if I have to invest in your company, then you should have a regular income. If you have a regular income, then I will make the income out of that. If you don't have a regular income, how I should make the income out of that? So for that purpose, the income statement plays a very important role. So now let's discuss about the uses of the income statement. Before the use, we are discussing about some purpose first. So what is the purpose of income statement? So income statement provides the information about the expenses, about the revenues, about the gains, about the losses. And what is the expense? So mainly if we are talking about the expense, the uses of the funds in the income process. So to generate the revenue, to generate the income for the company, whatever the funds we had used, that is going to be the expenses of the company. And the next is, after incurring the expenses, what are the sources of fund? Suppose I had incurred the funds, I had used the funds in selling and administrative expenses. Like I had incurred the expense on advertisement. So that is going to be an expense. And in the same way, by incurring the expense on advertisement, what I am getting? I am getting a revenue. My sales is increased. So that is going to be the source of fund. Mainly with the expenses, the revenue will be occurred. So expenses, use of funds in the income generation process, and revenue is the source of fund which is created by the expenses. Next is the gain. So whenever we are talking about the gain is not regular in nature, first of all. It is not recurring in nature. So gain is something which is like source of fund, but it is not associated with the regular operations. So that's why it is written here, not associated with the earnings process. So it is not generated because of the expenses we had incurred in the first point. It is because of some separate thing. Because it is not regular in nature. Suppose I have a machinery, but that machinery is not basically coming into the use. So what I had done, I had sold that machinery and I had made the income out of that. So that is going to be a gain. Suppose in the same way, I have that machinery is not coming into the use and I had sold that machinery and I had incurred the loss. That is going to be a loss to the organization, use of funds. So this is going to be the purpose. Purpose of income statement is to show the revenue, the expense, the gains and the losses. Now we are coming to the uses. So what is the use? The very first use is, it is useful in determining the profitability. How much profits earned by the organization for the profitability value for the investment purposes. I think everybody has seen Shark Tank India. I think most of us had seen that show that is related to the business, and we are highly interested in the businesses because we are the accountant, we are the finance related person, so we have the knowledge about that. So we always eager to see how much funding is offered to any person. So guys, if you had seen that show, then definitely you had listened about the multiple words. ROI. What's your business ROI? How much return you had earned on your investment? How much is your profit margin? How much is your ROCE, return on capital employed? How much is your gross margin? These are most of the words which everybody has heard, and that is mainly they ask. Suppose if I have to take the funding, then they are going to ask me about my ROI, that is return on investment. If my ROI is not good, then nobody is going to give me the funding. Because if I am not able to make the best use of their resources, then nobody is going to give me the money. Suppose if somebody is giving me 1 crore rupees, and if that person invests in the bank, that person can easily earn 7%, 8% return by giving to the bank. And after taxes, he can easily earn approx 5 lakhs, 6 lakhs. On yearly basis on 1 crore. Then if I am able to give him more than that, then only he is ready to give me his amount. Because in that bank case, he do not have any risk as well. But in my case, he have all the risk is with that person. If my business will be closed, the investment will be gone. So that's why they want the ROI. Then the next is ROCE, return on capital employed. It is similar to the ROI. Mainly profit margin. How much profit I am making in comparison in percentage to my sales. So these are the things which are going to play a very important role. So these all ratios we actually find out using the income statement of the company. So it is useful in determining the profitability value for the investment purposes. And also the credit worthiness. So what is the credit worthiness? If suppose some supplier has given us the goods on credit, then we are able to pay them on time or not. Suppose I was given the goods on credit for 15 days, but I am not able to pay in 20 days as well. So nobody is going to give me on credit. Why anybody will give me? Because I have not paid on time. So this is going to play a very, very important role. That whenever I am paying to someone, I will be paying on time. And that is possible only when my profit is good. I am earning a good amount of profit, then only I can pay to anyone on time. Suppose I have taken a loan for myself or I have taken the car loan. When I should pay the car loan on time? When I am earning the good amount, when I am having a handsome salary, when I am having a good business, when I am making good income, then only I should make the payment on time. In the same way, it applies on company as well. Company takes the loan. So when the company is able to pay on time, when they have the handsome income, when they have a good amount of profit, then only they should pay on time. So it will be possible to show the better credit worthiness. Credit worthiness is in terms of how, if suppose I need a money, whether I should get the money or not, it will be totally dependent on the income statement of the company. Next is, it helps an organization in predicting about the future cash flows. Suppose, let me take one more example. Future cash flows. Suppose you are applying in for any job role, and ultimately you had applied for the job role. So what they will ask you? What is your past experience? They will ask you about your past experience. So past experience is something which you had earned. And on the basis of your past experience, your success for the future will be dependent. How useful you are for the organization, how much cash flow an organization should make out of your capability, out of your experience, that is going to be the future cash flow of the company. In the same way, the income statement of the company, whatever they had done in the past, how much profits they had earned in the past, that is somehow going to reflect the future of the company. Suppose I am saying Reliance is a very good company. So Reliance is not a good company from last 1 year. Reliance is a good company from last 10 years, from last 15 years, from last 20 years. So whatever they had done in past, that is going to reflect their future. So I had purchased their share in 2015 because I know about their future. So by the way of the past performance, we are predicting about the future performance, future cash flows, which an organization should earn in the regular term. So that is the usefulness of the income statement. Now, the next point we'll be talking about is income statement terminology. So this terminology plays a very important role. The first is the cost. So what is the cost? What do you think about the cost? So suppose I have to purchase any asset, purchase any machinery. So whatever the money I am paying to purchase that machinery is a cost. And whatever, suppose I have to purchase the inventory. So whatever the money I am paying to purchase the inventory is my cost. So that is going to be a cost. So cost is going to be very simple. Cost is the amount actually paid for something. So whatever the money I am paying for something, that is going to be a cost. And what is the expired cost? Unexpired cost. So basically, the cost that will expire in the future periods. Suppose I had paid the insurance expense for the next 3 years. So that cost is an unexpired cost because I have not paid for the current period. I had paid for the future periods. So that expense is going to be expired in the future. After 3 years, it will expire. So that is an unexpired cost. So unexpired costs are the costs that will expire in the future periods and charge against the revenue from the future periods. So what we do, just like when 1 year will pass, I will charge 1 year insurance expense. When 2 years will pass, I will charge remaining second year of insurance expense. When the third year will pass, all insurance expense will be charged, whatever is remaining. So when we had actually when we had incurred those costs, at that time it is an unexpired cost. When we are charging that cost in the income statement, it will become the expired cost. Just like here it is given, first example is inventory. So inventory is an asset. So ultimately, whenever we are talking about the unexpired cost, it will create an asset, because asset is something which provides the benefit to the organization in the future. So whenever I'm incurring the expense on inventory, inventory is something not going to be used today. Suppose I purchase any inventory, I'm not going to use it all the inventory today only in my factory, or I have to sell it to the customer. I will keep it. I will keep it for the future. I will keep it for next month, 2 months, 3 months. So that is going to be the inventory. And whenever the inventory is applied in either I do the production, either I convert, either I sold to the customer, it will be transferred as a cost of goods sold. And when it becomes the part of cost of goods sold, it becomes the expired cost. Same, now we are talking about prepaid cost of insurance, just like I had given the example. So prepaid cost of insurance is something which is unexpired cost. And when it comes to insurance expense, means when 1 year will pass, it will be charged into the income statement. So it will be charged as an insurance expense and it will become expired cost. In the same way, net book value of the fixed assets. So what we do, whatever is the fixed assets, the cost of the fixed asset will be allocated in the form of depreciation. Depreciation is going to be charged in the books because we had purchased the asset that can be used for next 5 years. So till next 5 years, the depreciation is going to be charged in the books and that will be an expired cost. In the same way, cost of patents. So whenever we have the patent is something related to the technology, related to advanced technology. We had innovate something that is related to patent. So we have a patent of something and that have a life of 5 years, 10 years. So it should be amortized over the useful life of the patent. So that is going to be the unexpired cost and the expired cost. So mainly in the income statement, we are talking about these particular expenses. And in the income statement, we are also going to talk about the operating expenses, unoperating expenses, which we had already discussed. So guys, this is all about the income statement. In our next session, we'll be talking about the balance sheet. And guys, one more thing, income statement is something which is showing the performance of the organization. That's why income statement is also known as the statement of financial performance. So if you had seen something like written as a statement of financial performance, then they are not talking about any other statement. They are talking about the income statement only. So this is all about the session.